Most of Southern California's apartment market didn't get to join in on the big upward momentum seen in the U.S. apartment market in 2010, but there was one very notable exception, the Ventura Oxnard area. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Ventura Oxnard update. 2010 wasn't a terrible year for Southern California's apartment markets, but it wasn't a very good one either. Of the nation's core 64 metros, Southern California markets are well represented on the bottom of the list. The U.S. average was 4% revenue growth in 2010, but revenue growth came in just above 1% in L.A., San Diego, and Orange County, and 2.7% in the Inland Empire. But then there's Ventura, and it's acting like it doesn't have anything to do with its neighbors. Very good year for the apartment sector here. Revenue's up 6.5%, good enough for 12th place nationally, and the only California market that did better in 2010 was San Jose. So let's take a look at how they got there. Same-store rents jumped 1.1% in fourth quarter, and that pushed annual same-store rent change to 5.1%. That's the 7th biggest increase anywhere in the country, and by comparison, no other SoCal market increased rents more than 1.2% annually. And that's a little surprising, especially in San Diego, where rents were up only 0.9% annually, despite its economy holding up a little better than the other markets in that area, and occupancy holding pretty steady there even during the worst of times. Speaking of occupancy, Ventura is on the top of that list too, 96%, tied for 5th in the country with Miami, Minneapolis, St. Paul, and Oakland, following an increase of 1.4 points in the past year. But occupancy rates really aren't terrible anywhere in the Southern California area, around 95% in San Diego and the Orange County, and in Inland Empire and LA around 94%. So what's going on to make this one stand out? Well, for one, Ventura Oxnard is a much smaller market than its neighbors, and it's easier for smaller markets to see big shifts one way or the other. And for that reason, and looking deeper into the fundamentals, it's unlikely that Ventura Oxnard could sustain that kind of momentum going forward, especially on the rent front. And really, it wouldn't be surprising to see other Southern California markets like San Diego leapfrog Ventura for revenue growth in 2011. And to that point, when we dig deeper into the data, we find it's really just two submarkets driving up those revenue numbers in this market. And that is Simi Valley, Moore Park, same-store rental rates jumped 9.8% in 2010, and in Thousand Oaks, where same-store rents were up 9.4% year over year. And when you look at this chart, you see that the other submarkets really not much rent growth at all, and so those big numbers in those two submarkets just probably aren't sustainable going forward. So that wraps us up for Ventura Oxnard. Until next time, for NPF Research and Apartment Market Dynamics, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.